The ultra wealthy have cracked the tax code, and right now you have a chance to do the same. But the clock is ticking. By 2025, you'll either be writing a large, painful check to the IRS or taking full advantage of a legal strategy that could let you keep more of your hard-earned money. So stick around, because by the end of this video, you'll know exactly how the wealthy play the tax game and how you can too. Let's face it, tax season can feel like punishment. You work hard all year, and just as you start to get ahead, here comes the IRS asking for 6 figures. Meanwhile, the ultra wealthy seem to live by a completely different set of rules. So how do they do it? The answer is simple. They don't just make money, they move it strategically. They leverage tax laws that are designed to reward investment, not just income. Now, traditionally, that meant buying something like real estate, yachts, private jets, or commercial buildings as business expenses to reduce your taxable income dramatically. But here's the catch. Some of those assets, they lose value. Your jets need maintenance, yachts sit unused most of the year. It's a flashy strategy, but not necessarily a smart investment strategy. Sure, owning a yacht sounds really fun, but it's hardly the best way to grow wealth. You're left with an asset that drains your money over time instead of generating it. And of course, owning a yacht sounds incredible. It's actually one of my personal goals. But as a tax strategy, it's no longer the most effective way to build and grow lasting wealth. For decades, high-income earners like executives, entrepreneurs, and professional investors followed the same playbook. You buy high-ticket items, write them off, and call it a day. But this is the problem. The world has changed. Traditional write-offs don't always grow your wealth. They don't create passive income, and they certainly don't give you an edge in a rapidly evolving financial landscape. Today, the smartest investors are looking for something more powerful than tax breaks. Something that doesn't just reduce your taxes, but also grows your wealth in a meaningful way. Something that can work for you 24/7, generating income while you reduce your tax bill. They're looking for tax breaks that build their wealth at the same time. Now, imagine a strategy that doesn't just reduce your taxes, it builds your wealth at the same time. Welcome to the world of Bitcoin mining. Here's how it works. When you purchase Bitcoin mining equipment and prepay for your electricity, you're eligible for a huge tax deduction in the year that your expenses are incurred. First off, 60% of the cost of the equipment that you buy in 2024 is deducted for depreciation, and 100% of the cost of any electricity that you pay for to operate your equipment is also deducted. That means you reduce your taxable income while investing in one of the most valuable and appreciating assets in the world, Bitcoin. No sinking money into assets that lose value every year. And that's not all. These mining machines don't just sit around. They generate Bitcoin every day, 24/7. It's like having a machine that prints money while also lowering your tax bill. Now, this is how it works. We'll break down the numbers. With our starter package, you'd invest $160,000 for 20 high-performance miners and $56,000 for a year of electricity. That's $216,000 in total expenses. And if you're a high-income earner making $300,000 or more a year, your tax bill might be substantial. But with a $216,000 deduction, if you're a fully mining business, you could reduce your taxable income from $300,000 to just $84,000. This could cut your tax bill by about $79,000 in the first year alone. And that's not all. Those mining machines generate an average of $315 worth of Bitcoin daily at today's exchange rate of $100,000 a coin, which amounts to about $114,000 annually in gross Bitcoin production. Now, subtract your electricity costs and you're left with a cash-flowing, wealth-building asset while reducing your taxes. And this is why smart investors are shifting gears. Unlike a private jet or a new building, Bitcoin mining doesn't just reduce your taxes, it creates a consistent income stream. It's a deduction that actually pays you back. And this is why more investors are making the shift. The old buy it to write it off model is outdated. Investors are tired of pouring money into assets that actually lose value just so they save on taxes. With mining, you're gaining exposure to Bitcoin, which is the world's fastest growing asset, and it works for you while you sleep. Now, what do I do next? Well, here's where most people get stuck. They think, This sounds amazing, but I'm not a tech expert. And that's where we come in. At Abundant Mines, we handle it all for you. We provide the mining equipment, set up the operation, manage the electricity contracts, and handle all the technical details. All that you have to do is sit back, collect Bitcoin, and watch your tax bill shrink from the miners that you own. You get the tax benefits and the Bitcoin, all without lifting a finger. So why do this now? Well, time is running out. Once 2025 hits, the opportunity to reduce your 2024 tax liability will be gone. And the huge 60% bonus depreciation benefit for 2024 purchases shrinks to 40% in 2025. Right now, Bitcoin's price is rising and mining equipment costs almost always follow. The longer that you wait, the higher the price of entry. By taking action now, you position yourself to capture potential tax savings for this year instead of waiting until next. In this case, procrastination costs you far more than time. It's going to cost you money. A year from now, you'll either be saying, "I'm so glad I did," or "I wish I had." Don't let this opportunity slip through your fingers. Schedule a call with us and find out how Bitcoin mining could offset your taxes and build your wealth at the same time.